Superjen here with a thought for your day. Did you know that the average new home cost in Winnipeg is $279,651 for an average monthly mortgage payment of $1,232? That is a whole lot of money that is flowing from hardworking real people, women and men, to bankers that put in zero value into your home. And in fact, the loan that you think they gave you, which is value, they didn't even put in value to that really either. So, have you ever read your mortgage? Have you? I mean, I know you don't want to, but let me make the case for why you want to do that. Have you ever read your mortgage? Any mortgage contract is a special type of financial document called a security or security interest. You've heard of the financial securities law? So every mortgage contract is actually a falsified financial security interest because you essentially lie about the amount and rate of interest. And to deal or traffic in falsified security interests is money laundering. Amazingly, folks, the truth is that the actual act of making a mortgage payment to a bank is itself an illegal and unlawful act, as to do so is aiding and abetting money laundering. If you will take the time, like an hour or two, to read the Mortgage Payment Abatement Advisory at wherex.org, it explains it all very well why it is illegal for you with such knowledge to make any further payments to the bank. The proper procedure is to send notice to the bank, a notice of abatement, that you are holding any such payment in abeyance or lawful suspension, pending proof that the other party, the bank, is not operating contrary to the criminal law or as a member of a criminal organization as so defined. The proof that they are not operating such can only be accomplished by a full and fully public investigation into the global nominal financial system and into the massive scale and scope of criminal law violations as already admitted by multiple governments, by the broadly defined legal profession, and by the courts. The nominal financial loan system. And remember, folks, nominal means existing in name only. So a nominal loan is a loan that exists in name only. It is not a loan. Reading from wherex.org, for the past 40 years, the true driving force of finance has been the rubber stamp mortgage foreclosure process in the civil courts. The system adopted the fast-track procedures in the late 70s and early 80s, officially to streamline the foreclosure process. But the more significant consequence was and remains that virtually no one, other than the people in the business of making money from them, ever actually reads the securities anymore. Remember, the security is your mortgage. Step by step, the finance lawyers have added ever more one-sided terms and conditions that are exceptionally lucrative for the bankers and for themselves, but which are also flagrantly and scandalously criminal. The direct frauds against the nominal borrower remain overwhelming, but the largest portion of the criminal provisions are to facilitate the bank's ability to leverage the securities in the financial markets. Since 1990, the implementation and then massive expansion of this racketeering-based business model, basically a double-cross leverage, double-counting device, and their ability to get away with it has allowed the private financial system to harvest at least an extra bonus $10 trillion of unearned wealth / unjust enrichment, or an average of about $1 million from each of 10 million Canadian households. Even before the so-called derivatives, there is over $1 quadrillion, that's one with 15 zeros, of endlessly leveraged financial assets in the aggregate domestic and international financial markets, which is built upon a foundation of broadly defined debt securities, the largest portion of which are mortgage-secured debt. That is why the global foreclosure process is essentially a rubber stamp process by the civil courts that almost never make any meaningful inquiry into the real transaction, into the actual collaterals and securities that get exchanged when a so-called loan or a nominal loan is made. Step by step, the financial lawyers have added ever more one-sided terms and conditions that are exceptionally lucrative for the bankers and for themselves, but which are also flagrantly and scandalously criminal. The system is trapped in a circular reference where the broadly defined private financial system is robbing us all blind, and the lawyers and judges are protecting them no matter how egregiously wrongful and criminal it gets, because the judges and lawyers are themselves co-liable for the consequences. The system is not going to fix itself. Rights are never given. They can only be claimed by the act of asserting them. They can be exercised. The people's greatest natural advantage is that they have history, law, and reason on their side. And above all, equity. But Jen, you got the house. Somebody has to pay for it. Well, apparently, folks, if you go and read your mortgage, technically you've signed it over to the bank, not properly understanding the definition of as security, therefore. The bank does not bring any value to a loan. They obtain credit from the existing in name-only borrower and then reinsure that credit. In a typical mortgage of, say, $100,000, you never actually receive $100,000, do ya? Plus, for a $100,000 so-called loan, you have to pay $10,000 or $20,000 to the bank as a down payment and only receive $80,000 or $90,000. But you swear and sign that you received $100,000, right? There you go. That's your fraudulent security interest. That's your falsified security document. Plus, back to the down payment for a moment. Did you know that to charge a fee for just lending money and doing nothing else is defined as extortion? All the proof, folks, and evidence has already been gathered. The work has been done and is waiting for you at wherex.org. Listen to this from 1705. A man shall not have interest for his money, and a collateral advantage besides for the loan of it. Every benefit taken indirectly by a creditor, for the granting of which no impulsive cause appears but the money lent, will be voided as extorted. And from 1889 court, a stipulation capitalizing interest in advance, turning it into principal and charging interest upon it, however formally expressed, was not allowed to prevail. And a stipulation that a lender should be paid a commission was always defeated. What we think of as a down payment is technically a form of capitalizing interest in advance, which is illegal under the Bank Act, GAAP, and the International Financial Reporting Standards. The principle of law is courts will not enforce a contract that Parliament has made unlawful. The principle of public policy is ex dolo malo non oritur actio. No court will lend its aid to a man who founds his cause of action upon an immoral or illegal act. The law is on our side. Read the Mortgage Payment Abatement Advisory at werex.org. Educate yourself a little bit so that you know what you're talking about. But Jen, if this were true, we'd be hearing about it in the news.
CTV News.
Here's what's making news tonight. New details are coming to light about a sophisticated fraud and money laundering scheme which bilked unsuspecting Manitobans out of hundreds of thousands of dollars.
For someone to go through and sort of select their victims, when they're going to do it, how much they're going to charge. It takes a lot of calculated time and calculated risk for them to carry it out.
Police say the amount of money and length of time makes this investigation unique. But this type of crime happens more often than the public may realize.
Was charged with 14 fraud and money laundering related offenses.
How interesting that they say specifically 14 violations or offenses, because according to forensic economist Timothy Madden at werex.org, a typical mortgage in Canada today or globally has between 14 and 24 prima facie racketeering violations and offenses. Go ahead and read it yourself. Check to see if there are any disclaimers in your own mortgage that say something to the effect of, notwithstanding the provisions of any statute or law relating to the rate of interest payable by debtors, this contract shall remain in full force and effect, whatever the rate of interest received or demanded by the bank. So they even tried to make it enforceable if they charge more than 60%. Now, from what I understand listening to Timothy Madden, it was in the late 1800s in Canada that there was a push to make 6% interest per annum, 6% per year, a maximum interest rate all across the country. Apparently, the judges, which are all ex-bank lawyers, argued that would be not fair and would collapse the system, and the lawful rate of interest, the criminal rate, inched up over the years so that by nowadays the maximum rate of interest to be charged is 60%. But yet again, it's in the law that if the rate of interest is deceived, if you say in the contract that you're charging one thing, but it is calculated and proven that that's not the amount being charged, then you can't charge more than 5%. So all you have to do, folks, is learn how to calculate interest, and it's a high school math problem. You know, you can do it. You might have to dust off a certain section of your brain, but it's all fraud, all crime, all the time. Once you can see it, it's all you see.